Yo, can you hear me?
Yep.
Actually.
Yo.
Oh, it just closed me out for a second. I'll do the same. Swap.
There we go.
That'll be all.
All right. You use the sweet cream, right? The liquid, not the foam.
Yes.
Alrighty. 680.
Thank you.
So everybody's muted. Make sure you mute yourself. Let's see. All right, so so all you guys are on here for the most part. Okay. All right, so I understand that you guys were hold on, let me, there we go. All right, so I understand that you guys have been like doing crazy numbers just with the first Zoom, the second Zoom. This Zoom right here, like I said, is going to be the most important to me because this is the reason why I say, you know, structure doesn't exist. A lot of people always get that confused and they be like, well, structure does exist. And, you know, like it just goes over a lot of people's heads. So type 1 if you guys are ready for this one. All right, let's go. So what I'm going to do is start with major and minor liquidity. So for the major and minor liquidity, let me go ahead. Let me move this down here. Oh, also for you guys that the ones that kind of like overlooked on how I caught that Euro trade, literally the daily opening right here and the daily open right here. I think for this one, I think I did open my trading view by accident, and that's when I saw it. I'm just like, ooh, because in reality, if I was on trading view before that, which I hardly am, I would have ended up getting on this daily opening. Because no matter where you are, I mean, the daily opening can still be grabbed multiple times. And what I mean by that is, like this area right here, like I said, the bodies of the candles are where the volume is. You need volume and then liquidity and then the move. So for this daily opening right here, a lot of people have been like, okay, you got to tap into multiple times. You got to understand this. This is volume. We need liquidity to move the market. This is liquidity. So now we didn't have any liquidity right here, just volume, which created this push up. After that, now we have liquidity all right there. And if you guys really pay attention to this too, this is also like a daily, this is like, not the daily, this is the London low right here. This is the London low. So all we did was just tap into London low in the volume, you know, like it doesn't take much at all. And what I'm about to show you guys today is going to be really, 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 really clean. And it's going to really change your thing. My bad. Let me adjust my settings. I don't really use this laptop like that. Let's see, remove drawings, remove. Yeah, I don't know why people are so hard-headed trying to come into the thing, and then they want to ask, can you repeat that? Take up you guys' time. All right. So actually, let me go to the one Arctic and basic. I'll draw it out first. Okay. So I'm pretty sure you guys have all seen people do this. They'd be like, you know, structure, 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 structure. You guys are familiar with that, right? Type of 1 if you guys are familiar with that. Okay. I don't trade this. And you guys will not trade this either. The reason behind this is whenever you guys see me use my highlighter tool, a lot of people on Instagram or something like that, anytime I post something, a lot of people, they always think that, oh, all he's doing is marking out highs, lows, highs, lows. No, I'm really not. The purpose behind this is because these higher lows are not true higher lows. They're major liquidity. Now you see how you have this range right here from point A to point B. So this right here is already one range. So now what you got to understand, inside this one range, you can go ahead and get a fib and then, you know, look for your discount. And this is where it get interesting. So right here, this will be the 50%. This is why I say never take 50% trades, because 50% trades is a false higher low and you will get wiped out the market. So the point of a 50% trade, anytime I see a 50% trade and we come to the premium to the left, I know for sure we're just going to go ahead and wipe that 50% out and go to the discount. So if we look over here and this is the discount of this range, easy. Watch this. This is the 705 and this is the 886. Go ahead and chalk out this whole entire range from the 705, 886. When you guys get familiar with the fibs and everything like that, you'll be like me where you don't need it. So then we should have a methane candle. Honestly, sometimes you can even find the 0 and 100%. You can even find that clear as day. For you guys, I was in the boot camp. Sometimes the hidden order blocks, but in all honesty, the methane candle is going to be the best because that's the most promising one. Because like I said, those are where the transactions was fighting to in order to, you know, continue that push between the bulls and the bears. So now what this is going to do, the market, depending on what's over here to the left of the premium, let's say that this is the premium right here. So now what's going to happen is we're going to go ahead and wipe out that higher low. Once we wipe out that higher low, then we will continue to go up. So the point of this higher low right here that you see in green, this is the major liquidity. So we can just put ML for major liquidity. The reason why I call this major liquidity is because also for you guys too, for the new words like major liquidity and everything like that, I don't see why you guys will get confused by it, but you know, just to make sure, because like I made sure I structured everything, you know, so everybody can get it. But the point of the major liquidity, why I call it major liquidity, is because right here is where you have a lot of retail traders buying in the market. So when you have a lot of retail traders buying the market and leaving behind a bunch of wicks, what is that? That is liquidity. That is liquidating, not liquidating, liquidating the whole entire higher low. So now when you liquidate that area, that's where the most liquidity is. So now we take out the major liquidity. Think of it like an energy. Think of it like track, whatever. Like you're running like the first leg on the 4x4. You give it your all on that 4x4, you know, and then like your first leg, your first guy, your first girl, whatever, they give it their all in their first leg. So now when you give it to the second leg, you know, like the more they go out, second leg, third leg, fourth leg, they're going to have it a lot easier because the first person finished strong. When the first person finishes strong, then that means the other people are going to have it even better. You know, they can actually be more comfortable. So the purpose behind this is the first leg. This is why it's major liquidity, because we're taking out that higher low where a lot of people are. Right here where this POI is in this previous range, this will be called the minor liquidity, because you will have your traders already wiped out. So I'm pretty sure a lot of you guys would have been like in London, whatever, and then you would have ended up buying here and then put your stop loss underneath it. And then you woke up and you got stopped out, because a lot of the time people are learning the wrong things and they're not understanding what's going on under these higher lows and above these lower highs. So the purpose behind this minor liquidity is because we already took out all the energy. So when we took out all the energy, you know, it's just like the movies, you know, like Fast and Furious or whatever, you know, after you defeat everybody, you know, you guys can just sit back, laugh, take a breather, and then, you know, collect everything and then, you know, go about your day, go about your week, whatever. So this is basically what it is. The minor liquidity is once we dip into it, we go about our day. So then after we tap into that, then that's going to go ahead and set up another push. So now once we let me see, which one is this? This is going to be the protected high and lows. Yeah, so once we already have this, a lot of people call this the break of structure. But really, once we close above that, what's going to happen is a lot of the time, especially like if we're in a premium area, let me go like this. If we're in a premium area, a lot of the times we will go ahead and tap it. And after we tap it, we'll go ahead and come take out that next higher low right there. And I'm gonna give you guys two examples. And after we take out that next higher low, then that's when we're gonna go for the methane candle. So then after we go for that methane candle, then we're gonna go up to possibly 50%. Once we come to the 50%, we'll come right back to the discount that range. And then it's going to happen again. It's going to make another higher low right here, go up, take out that higher low again. And then once we take out that higher low, then your 50% gets wiped out. So now if you look right here, this is like the equal highs basically that we will get taken out. And this is how you know when it will get taken out. This right here is at 50%. This right here, a false higher low. But we're still in the major uptrend. Now I'm going to show you guys on why it won't come down here. Sometimes it could, but nah, your stop loss will always be right there. So now, if I go ahead and show you guys some examples. Let me go to 5 minute. 5 minute actually has some really dope examples sometimes about it. So if we go right here, this one, what I was actually the name of it. Damn, it's so many and it's so clean. I just want to pick a random one. Damn, these are all so clean. Okay, you guys, give me a different pair. Type in a different pair because this is low-key a little too easy. I need something different. Which time frame would this be best for? Wipe out that in your mind. It's no such thing as what time frame is best for anything. You're going to see it on all time frames. Tuesday through Fridays, essentially good example. GJ. Damn, I haven't looked at GJ in a minute. When I say a minute, I'm talking about a minute. I think I just did it right. Type one if you can see my screen real quick. Okay, perfect. All right, make sure I did that right. All right, so you said GJ. Oh, damn, GJ, so nice. Yeah, so let me give a good buy example. Damn, even GJ is beautiful. Okay. All right, so if you guys look at this area, you guys can clearly see how we have damn, I wanted to make it harder for you guys, but I guess. All right, so you see how we have a higher low right here. Now this higher low was actually bounced off of POI. This is just like a regular, just some people call them voids, whatever. Me personally, I'll be sketchy on taking them because like I said, double flat bottoms, I need to see some type of wick because those are, you know, don't want to be the candles that get blown past. Oh, as it did right here. Yeah. So those are going to be the candles that get blown past really quickly. So if you look right here, we have a higher low. Now, these wicks that tap into, sometimes they can even tap into order blocks. I don't use order blocks, but sometimes they can tap into order blocks. Sometimes they can tap into the methane candles. Whenever you just see that wick instantly take off from that POI, that itself is another POI. So that's why the wick came back into it. So as of right now, this is an actual higher low that bounced off of POI. So this is something that you'll put your stop loss underneath. But since we're on the smaller time frame, I'm gonna just be mindful of that. So then if you look at this, we have a higher low right here. So we have our higher low right there, but we don't have no POI that we bounced off of. We don't. So now if you look at this underneath that higher low, where is the POI? I mean, we do have a huge methane candle right here. This is actually gonna, I'm happy that I see a methane candle like this. So somebody asked me, I think I forgot who it was, but they said, does the methane candles have to have an equal side? For the most part, yes. But if you look at this, you can kind of see like it's questionable. Like, is this a methane candle? So what you would do is you would go ahead and highlight it. This is the 5 minute. Damn it. It's the 5 minutes. So it's probably gonna look ugly in the 1 minute. All right, so I see a methane candle right here on the 1 minute. So let's go back to the 5 minutes. And then let's say if I was trying to get into this trade right here, that's 11 pip stop loss. Oh, also too, for just a key factor, I don't know if I told you guys this, but you see how you have this bearish candle. I know a lot of you guys, when y'all look at my trades, you'll be like, where'd I get my stop loss from? Whenever you get that bearish candle in this sense right here, once you get that bearish candle, I'm always going to pull that bearish candle, because in reality, this bullish candle basically did like a stop hunt in a way. So it's no point of me putting my stop loss underneath where this range is starting from, because if it comes back to stop out this level right here where the bearish candle stopped at, it's probably going to end up keep going. So now let's see if I want to go ahead and tag up this area right here. I'll put it a few pips underneath. So now if we go ahead and go like this, boom, and then the target was hit. So now if you look at this area right here, this candle, it looked like a methane candle, but it wasn't really clear. So all I did was refine it to the 1 minute to make sure I can see a methane candle in there. And then once I see that, I'm going to go ahead and execute that trade. As you see, this stop loss never got hit. Like I always tell you guys, 10 pips, you don't need any more than 10 pips. If you're the way I'm showing you guys right now how to read the markets, if you need more than 10 pips, honestly, it's not going to be a good trade. I mean, every blue moon it could be, but never 10 pips, never more than 10 pips. It doesn't make sense, to start risking that much. So now as we see this right here, let me go ahead and delete all of this now. If we see this right here, we have this higher low now. This higher low, it dipped off of a POI, but the higher the time frame for the POI, the higher the time frame, the stronger the POI will be. So if you see a POI like a methane candle in a 1 minute, it'll be good short term. But if you see a POI, let's just say like on a 15 minute or the hour or whatever, then yeah, that's obviously going to be the biggest move, because the smaller time frame is just meant for the smaller transactions. It's not going to move faster than one or the other, because if you have a 1 minute candle and then a 1 hour candle melts too, it's going to be the same thing. So that's why I say it doesn't matter what time frame you use when you're saying what time frames is best to look for. That does not matter. It's irrelevant basically. So now as we go ahead and replay. So now as you look at this, we took out this higher low. If you look right here, just from the wick to the body, anytime when you see pushes like this to where it leaves like a long wick and a double flat bottom, always mark that out, because sometimes itself that can actually be a POI in there. So let's go on the 1 minute and see. So if we go on the 1 minute and see, it's not really that good, honestly, but this is where this comes in right here. If I can't see anything like that, let me go down to the 30 seconds. If I go down to the 30 seconds, oh, I see a beautiful methane candle right here. Highly doubt this will get hit, but oh well, we're gonna see. So yeah, this one didn't get hit just yet. Yeah, so when I see it leaves like that, I'm just gonna let it be, because as of right now, it's probably going to turn it into a negative. Let's see. Open for right now. Because more than likely, what's going to happen, I don't see it coming to test again just yet, honestly. What's going to happen is probably going to come down here and then they'll be testing that methane candle. Honestly, let me see real quick. See if we can open here. Damn, GJ moves a lot, but it's messy. All right, so let's see. So we have this whole entire area. Now we do have closure underneath here. This is actually a really good example because this one's actually really choppy. Yeah, so yeah, it still did its thing. 1, 2, 3. Normally, like when I see a setup like this, I'll literally just put my stop loss above the highest wick, honestly, because it's no point of going lower to try to get it because your stop loss will still be small. Honestly, even if you enter it from the base, 10 pip stop loss is still yet again, so why I say you don't need anything more than a 10 pip stop loss. So now if I go back here, let me go back to the 1 hour for DJ. So actually, 4 hour. I never look at the 4 hour. So if we look at areas like this, where can I get it at? Right here. So remember what I told you guys. So a lot of the times, if I go ahead and I put my stop loss, so if you look, this is a true higher low. Because why? We do have this hidden order block. It's still going to be a POI. Now regular people, they like to go for regular order blocks and stuff like that. I get it, it's cool. But if you are going to do an order block, let it be hidden. Normally you could see this on a higher time frame. Honestly, I haven't traded this in a long time, but it's still a POI. So just to make sure, watch this. So let's just say that you do see this hidden order block. All it is just 2 wicks going back and forth each other. So if you get a wick, that wick's right here, and then you have the next candle that trades down into it, or even like a even wick like this. That's all it is. But watch this. If we go down to the 15 minute now, we go down to the 15 minutes. I can see 2 methane candles right here. So whenever I see 2 methane candles right there, I can go ahead and let me do this. Let me go to the 16 minute. So I see a perfect methane candle right here. This is really beautiful and really even. Well, actually, I see 2, but let me just go like this. Actually, whenever you see 2 like this in the area, just go ahead and still mark them out. Just go ahead and still mark them out. If that's the case, we can just go to 17 minute, just to refine it a little bit more. Right there is good. Now, this is what I like to do. So let me see. From this wick right here, all the way to here, still too wide. So now let me go down to the 5 minute. Let me see what I see in the 5 minute. Still a little choppy. So whenever I see something like this too choppy, I'm just gonna go ahead, pull it to the low, and watch what I do. So now, what I'm gonna do, I'm gonna just go ahead and wait for a time. So what time is this? This is 12. This is 12:15. 12:15 sometimes get some good setups. So then 12:30. So 12:30, London definitely probably printed that low. So then now we have 12:45. We're close. We're still in our POI. So we're piercing it. We're just waiting still now. So now this is 1330. I mean 1300. So we do have 3 weeks going into our POI. 1, 2, 3. 1300. No, this is 1330 right here actually. Yeah, that's 1300. 1315. 1330 for another entry right there. As you guys can see, we did not stop out that 1315 wick just yet. So now we're coming back over here for another entry, 1400. And sometimes it'll happen. Don't get so many entries in that one level, because sometimes it can just, you know, decide to go against you if you don't do it right. But as you see, even from there. So if I see something that looks kind of fishy, I'm still going to go ahead and wait for time. Now, I'm going to be honest with you. I already know why I did what it did, is because if you guys were looking in the previous Zoom, this is your higher low. If you look to the left, remember I said higher low's got to get taken out. If you look to the left, you do have your methane candle right there. So you have a methane candle underneath this higher low. This higher low gets taken out. A lot of retail traders, they will put their stop loss right on this wick. When that happens, you get stopped out. So imagine selling London and then New York, when you wake up, it just completely reverses on you. Type of one if that has happened to you. And then somebody said, I was under the impression we should only use methanes at the start and end of the session entries. Yes, if you see it, those are going to be the good ones. Like this one right here, the session, this one, where is that? London, not London. So technically this is where New York ended up, which is 22. So if you look at it right here, where was the last methane candle towards the end of the session? This one right here. So you gotta like kind of like accommodate it. That's why you have to that's like for the times. For the times when I first started telling people times, they thought that you could just enter right at 1330. I mean, yeah, you could, but it's still good to, you know, look over everything and make sure, you know, you're not just jumping in blindly and stuff like that. When done, can you show us using the major amount of liquidity in the sessions? Of course. So type of one, if you guys got that. Actually, wait, don't type one just yet. I'm gonna show you another example real quick. So then now if we have, this is a really, really strong trend. Okay, so if you guys look right here, you can clearly see, what date is this? This is 15. I wonder if GJ traded down here already, because if it didn't just yet, GJ gonna be selling hard. But from right here to right here, this is where your range started. So whenever I say ranges, this can also go into the 15-minute ranges, but whenever I say ranges, always make sure it's to push. Always make sure it's to push. Don't get no stuff to where like you'll say like this is the start of a range and this ended. No, because you can see how you have a push, a little bit of choppy movement, and then another push. No, don't ever do that. This right here, this is all one straightforward push up to create this range. So now if we go ahead and take the fib yet again, right there to that range. There we go. All right, so we can already see that we're damn near about a 70%. We're damn near about a 70%. So now if you look at this, whenever you are trading, let's go ahead and bar replay this area right here. Watch this. So if we are trading, let me take this off. A lot of the times, traders would probably be like, okay, my bad, sorry. We're making like a higher low right here. So now what's going to happen is, okay, actually, you know what? Let's do it from a retail point of view. So then let's put our stop loss right underneath this higher low. And then let's just say that we're getting into a trade. We're getting into a trade. Okay, everything's good. Everything's good. We hit target. No matter of fact, sometimes you can just be that good so you just put it on there. So let me see. So it'll be like this. Go ahead, go ahead. Hopefully they end up closing out when they look at this, unless they don't know what they're doing. But now, as you guys can see, boom, 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 we start going back down. So they'll be like, okay, this area is still respected. We're going to continue to hold. Us, especially with all this liquidity right here at the top, we're going to be looking to sell into the discount range. And this is the actual true range. Because if you look at this higher low, we did not come off of a POI. And we made a higher low above 50%. When we make a higher low on or above 50%, that's not good. This is what happened. Oh, wait. Let me go ahead and do, damn it, I did not want it to, okay, there we go. Hold on, let me rewind that back real quick. Just kind of gave it away. All right, so a lot of times they'll be in drawdown and be like, ooh, okay, wait, let me move my stop loss down a little bit more, to give it some breathing room. And then after that, as you can see, if we look right here, one thing about the market is really simple, because after one area of liquidity is done, the next liquidity area will have to be done. So if you look right here, Murat said, these double flats don't have no wick, and it's also a retail higher low. So now that itself is liquidity. Once we take out that, we clearly see a bunch of liquidity right here that, traders resistance in a way. So now as we go ahead and take that out, what time is this? This is 10. I wonder if 11:30 will give it that push. I think 11:30 should. Yeah, 11. Oh, well, screw you. All right, so as we can see right now, we took out the liquidity, but we didn't close above it. So we took out what they will call a lower high. This was never a lower high. We did not bounce off of a POI. This was not a lower high. This area right here was a lower high. We did bounce off POI. If we look right here, also too, a lot of you guys, whenever you guys see wicks like this behind imbalance candles, that's going to be also set up for a really good POI too. I'm gonna give you guys a few examples. I'm gonna make another tab for you guys. But whenever you get those wicks behind those imbalanced areas, just think of it like this. Just think of it like a rock behind somebody. The wick behind that imbalanced candle is hidden liquidity. A lot of people don't really know how to identify that, but it's just hidden liquidity. A lot of the times you will see that. Like I said, the smaller the time frame, the smaller the effect will be. The bigger the time frame, the bigger the effect will be. So if you guys look at this, we can clearly see that we end up rebounding into this POI area because we have a wick behind the imbalanced candle. So now this is where our actual lower high is. This right here, it also makes sense with the cardio trend. This right here is the actual just retail lower high that got wiped out. They got wiped out. And like I said, 11:30 will mess with you. 11:30 will wipe out people like there's no tomorrow. So then now if we come over here, we have 11:15. We have 11:30. And then we just continue to go down. So for the people that just kept moving their stop loss down, they didn't seem they could have really lost $100, but now they lost like 200 or they lost 300 or 500, depending on how far they've been moving it down. So we're not going to take entries like this. Why? Because we don't want to buy anything over 50%. We don't. It doesn't make sense because this is the whole entire range. So now, if we want to go ahead and look, you could technically, to make it simple. That's why I told you guys to make sure that you use this parallel channel, whatever it's called. Where is that? This right here, because if you go ahead and just drag this from here, go up here and go up here, it just makes stuff a lot more simple. So really don't buy anything over 50%. I know a lot of smart money people do that. Don't ever do that. So now really what you want to see is anything underneath this level, you want to look for a POI. So now we can go ahead and we can just mark out this whole entire bottom base just to make our life easier now. So then now let's get rid of this because it don't make no sense looking at this. So now if we look, where is our POI? So we do have a really strong methane candle. Whenever you see the body like start getting higher and lower to where it's leaving behind less and less wick, those methane candles have a lot of energy. They have a lot of energy. So I'm gonna go ahead and mark that out right there. I'm gonna go ahead and do this another color. I'm gonna do FBG. There we go. Yeah. So then after that, which other ones do I have on here? POI2, POI2. Yeah, I'm gonna do POI2. All right, so look, if we look at this right here, this is our true methane candle right here. I don't really see any more methane candles at all. I don't. So we're already coming to this area. We already start selling hard late London, 12 o'clock. Man, let's look for 1330. Even though it's like a juicy setup, that's one thing I like about trading with times, because even though it does like a juicy setup, always go 1330. Always go ahead and just leave you with that entry. That's gonna be more promising. So 1315. Oh, this was actually really clean. We have a methane candle right here that was made late London. So this is another good example. Let me go ahead and mark this out, just for a reference point. I'll do POI2. So now for the question that was asked at the early on, saying that the POI, like the methane candles in the beginning of sessions, this is already one that happened. This was actually the last candle for London, honestly, on the 15-minute. So now if we go ahead, and now you see how we just instantly go up. So your 1315 candle has ran into this last candle in London for the POI. So not only did we run into the actual POI over here, the fatter methane candle, London ended off with the price action methane candle. When I say price action methane candle, basically just stand what the time is doing currently. Because if you're trying to go all the way to the left over here and look for a methane candle, don't ever do that. Stay with what's going on right now. That's why I say it's really important. Because a lot of the time people don't know how to catch these. They be like, how did you get this entry? Well, what did the last candle do? How did the session end off? How did the session leave a methane candle? Like those are things that ask yourself. So we already came into this POI. We made a POI doing price action. 1315, good enough. 1315, 1330 is good entries, but I like to Friday did give a good one, but 1330 was an actual solid one. So I still like to bang on 1330. So if you look at this right here, let's say if you did get in at 1330. See, 1330, still in the 10. So now if you're looking at this, we can go ahead. Let's see what the daily opening is. Let's see where the daily opening is. Let's see. So let's look and see to the left on where the most current daily opening is. Whew. Okay, so y'all see how this daily opening is all the way up here. If you look at it, this is our lower high that did its work. So now this can possibly take it out because we are shifting to an uptrend. We do have a methane candle right here that we do need to look out for. That's at the premium of the range. So we just got to look out for it. So let's see how this goes. I don't like how this area is still holding. Boom, right there. So just from right there to right here, like you're done for the week. Actually, let me see. Was this a week? Yeah, you're done for the week. You're done for the week. You don't need any more than that, like especially like I said, like if you guys are like just using 10 lots, like 50 pips is 5,000, like You can even make six figures a year, 6 figures plus with just a trading balance of 3,000 in your account. Like if you're doing it right, you can just have a base of 3,000. Like you don't need all this capital to gain wealth. People always want to compound their trading account, but forget the compound bank account. I don't care if I throw 50 lots on my trade and I profit 50,000 or 80,000 a day. It's not mine until I withdraw it and hits my bank account. I can show it off on my MT5, MT4, whatever. It's not mine until it hits my bank account. The second that they approve that withdrawal and it hits my bank account, then it's mine. Then I won that. I can compound my bank account. But why compound a trading account? And the market, I'm not gonna say the market is risky. I'm not gonna say it's risky, especially what you guys are learning now. But a lot of people, like lenders and stuff like that, they do consider us risky because everybody gives it a bad name. But it's important to compound your bank account because you can't go to a dealership and be like, okay, this is how much money is in my trading account. They're gonna be like, okay, what's in your bank account, and they're gonna be like, we need to see bank account. Now, if you're doing stuff for like houses and stuff like that, like trying to apply for a loan for houses, if you have a regulated broker, you can actually show the proof of funds and stuff like that. Like that's easy. But like regular loans and stuff like that, that's not going to fly with them at all. You got to make sure you compound your bank account. That's the most important thing. Also, along this way right here, if you guys can look, we took out these higher lows that was made in this range. Once we took out these higher lows that were made in the range, and we come to the discount of the range, that's all we need to see. That's all we need to see. Like I told you from the when we first started, you have your premium right here. I'm not the premium. You have your major liquidity right there, and then you're always going to have POIs underneath those higher lows, and vice versa. You're always going to have POIs underneath those higher lows. So now, what we need to see is let me go ahead and draw the opposites direction for you guys. So if we have this, so these are going to be major liquidity. Then we have minor liquidity and minor liquidity. Type of one if you guys got that. Would you enter on the first touch knowing it is a solid POI? Okay, I can enter off the first touch. After you guys finish this in February 1st, if you feel free to enter off the first touch, feel free. Just make sure you pay attention to like the 1 or the 5 minute structure, 1 minute entries, 15-minute ranges. That's all I do. 12 hour, I check that every Tuesday and Thursday. That's it. 6 hour, I don't check that. I don't even know what's on my chart. But yeah, write this down, you guys. 15-minute ranges, 5-minute structure, and 1 minute entries. That's what I live by.
Shay, what do you mean by 5-minute structure? Because I know like the structure seems kind of confusing. Like you said, retail structure doesn't exist. So like what kind of structure are you looking for on 5 minute?
So the same structure that we just did over right now. So if I show you, let me see, let me go to 5 minutes. There we go. So now if you look at this whole entire range that we did on the 15 minutes, remember, like I said, we did the range on the 15 minute. Now we're looking at the 5 minute structure. If we're looking at the 5 minute structure, you see all of these higher lows that we have at the top. So above the 50, we have all these higher lows above the 50. Once we have all those higher lows above the 50, I don't want to take any position. Just yet. I want to wait till we come to the discount of that whole entire range. Like I said, discount premium is always going to be there. People may have different names for it and everything like that. I just still call it that because that's what it's known for. But yeah, so if you look at the 5 minute structure, it's just creating these higher lows right above the 50. So now if you look at this on the 5 minute chart, you can kind of see like how we took the liquidity above here, kind of like resistance or kind of like equal highs. Same thing. It's just a bunch of liquidity being left above here. So once we took that out, what time is this? This would be 11. Like I said, I like to wait for 11:30. Honestly, 11 could give some good entries, but I like to wait for 11:30. So a lot of the times, if we look at it right here, now a lot of people would be thinking like, oh, we're breaking structure, we're breaking structure. No, we're not breaking structure. We're trending down to the discount of this 15-minute range so we can continue to go up. So if you look at all these higher lows, and then right here, I don't care nobody say this is a higher low right here, because if this was a live market, a lot of people would probably think this is a higher low right here. So then if you look at this, now we start, having the daily opening right here. We start trending down, trending down, trending down, trending down. And then we start to go up, make a pulsating move above here, taking this liquidity. And then we go down to the 15-minute discount of the range. And this is all within a 5-minute structure. You get me?
Yeah, I gotcha. But on the 1300 or because I know you said like we could enter on the first tap, but just to like extra confirmation, on the 5-minute, are you looking for like any specific thing to form, so we can take like a confirmed entry, like another methane candle?
Nah, really, on the 5-minute, I like to see a lot of wicks for exhaustion. Cause like, okay, look, I'm gonna tell you guys this right now. This always happens in New York, and this is why I can trade New York with my eyes closed. If you have a wick that comes down here, and let's just say that this is the body, and then you have another wick that comes down here, and then this is the body. If this right here is 1330, why are we getting so much exhaustion at a time we should be entering the market, Like kind of like right here. You see the exhaustion right here, exhaustion. We're staying in one spot, and this is right around like 1430. 1430 is right here. You see 1430, we getting that exhaustion, and we just instantly go up. And then even right here, let me not do that one because you guys don't want to be entering off of 12. Where's your time? 1600. Yeah, 1600. So you see how right here, if we look at 1600, we can clearly see that we're getting a lot of liquidity being left in this area, which we already have marked off. So now if you look right here, this higher low, it's not a higher low. We didn't bounce off of POI. All we did was just have like this little weird order block, hammerhead, wherever you guys want to call it. No, just don't do that. But if we look right here, now we actually came for the double flat bottoms of it. Double flat bottoms is going to be relevant on any time frame. Those double flat bottoms and methane candles are going to be your best POIs. Definitely. Those are going to be the only ones that I use. Like I said, from the boot camp, you guys can use the hidden order box, whatever, if you want to, if you see them. But if you see it, just refine it. Make sure you see that methane candle, because that methane candle is really going to tell you if it's going to take off from there or not. So then now, if you look at it right here, how we came to double flat bottoms. What time is this? This is 1330. Also too, another thing too. So you see how this is 1330. You see 1330 is right here. If we sold at 1330, I'm gonna go ahead and take the sell. Why would I take the sell? Because I can easily put my stop loss above here just a little bit, because our golden time at the beginning of the actual New York, we should not bypass it. Because if that's the case, New York took a whole different shift. So I'd rather get stopped out right there. Because if New York takes a whole different shift and actually covers over the 1330 candle, it's done. It's probably gonna go against you 100 pips no New York. It's done. But in this case right here, I can go ahead and enter off of that. Why? Because we already took out a false lower high. We came to a double flat. But even if you don't want to use a double flat, just make sure. Are we going to go ahead and trade past the 1300 range? No, we didn't. I can go ahead and take my sell off of this second exhaustion candle right here. 1610 and 16. We're already at 1600. So 1600 is one of our reversal go times anyway. So that's already 3 confluences just by looking at this area right here. Well, actually more than 3, but literally just that. Type of one if you guys got that. Okay. Perfect. So then also what I'm gonna go over you guys too, this is all within one structure. Let me delete this. Let me delete the indicators. So what I mean by retail buildups, if you look at this area right here, normally you would see this in Tokyo. This happened in London. Strange, honestly, but it'll happen though. But most of the time, it happens in Tokyo. So if you look at this, this is like for the trend line traders. So if you look at how slow it's creating an incline, it's creating an incline super slow. The purpose between this is whenever you get a bunch of higher lows, like in this example right here, once you get a bunch of higher lows, and these small higher lows are equivalent to like a treadmill inclining, that's a big no. Don't buy those. Do not buy those. They're building up higher lows for the retailers to start buying off of them, so we can come at a magic time and wipe them out. If we go ahead and look at another example, this is another example right here. You see these small little impulsive higher lows, dip beneath here, take liquidity. This wasn't a POI at all, so don't even worry about it. Yeah, we do have a methane candle right here, which is you know, it's cool. But let's see, there we go, which is cool. But the way the structure is, and we're already in Tokyo, I don't want to take any methane candles in Tokyo. I don't. It wouldn't make sense. But if you look right here, after Tokyo ended, yeah. And let's just say that if you do get lazy and you don't want to go ahead and go back all the way to see what happened, just do like me. Watch this. I want to see how the high ends off around these areas. If these highs end off around these areas like this, and we're still like hovering over in this area, let the retailers build up their higher lows again, thinking that the market is going to go up. And it's a Tuesday. Yeah, we got it going up on a Tuesday. And then once we, you know, get all these like, I don't want to call them fragments, but they're like little small impulsive higher lows. Once we get these little small impulsive higher lows, and we already took out Tokyo's highs, I'm gonna just chill off of London. I can enter off New York. If we look right here, New York, where's 1330? It just should came up. There we go, 1330. So then now after that, 1330, we're like by this weirdly printed methane candle right there. So then let's go to the 1 minute to see how that actually looks. Oh, damn, maybe it took my spot, man. I couldn't even go back that far. That sucks. I don't know where I was on that one. But let's just say that the market does build up like that. What's going to happen is the market is literally going to do that just because. So not to wipe everybody out, not to confuse them. They just don't know what they're doing. So now if you have your uptrend and you have like a really small impulsive incline, what's going to happen is more likely it's probably going to be Tokyo too, to where it gets taken out. After Tokyo gets taken out, what's going to happen is boom, 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 whatever, how I want to do. Since it's a GJ, hold on, let me do something like this. Since it's a GJ, there we go. All right, so now after that, then we will go ahead and sell New York. Because you got to remember, if this is Tokyo, once the highs are taken out, the lows will get taken out. Let's go ahead and make a pullback to create a false lower high. And let's go down again. Let's go up to take it out to go to premium. And let's go down again. Once the market goes up, it's going to go down. Once it goes down, it's going to go up. Pull back, rally, doesn't matter. It will always still do that. You said I was in September. I don't feel like going back that far, honestly. But type 1 if you guys get that. Okay. Now this one is the cardioid trend. So if you look at areas like this, watch this. This is something that you're going to see every day. So if you look at areas like this, lower high. Well, first off, cardioid trend is kind of like the shape of a heart. If you guys want to Google it, find the definition, you actually like it. Cardioid trend is kind of like a heart, just like that. So if we look at this right here, we can kind of see and kind of like mimic that heart in a way. And let me be right there. So if we look at this area, it's kind of like a W. Think of a heart as a W. So when the heart comes up, creates a lower high. Once we create a lower high, a lot of people are probably going to be, higher low. Once we create this higher low, a lot of people probably thinking, oh, we can go ahead and buy. Keep in mind, we're probably going to be trading above the 50%. Once you're trading above the 50%, like I said, higher lows above 50%, don't take it. Once we're trading above that 50%, a lot of people are probably going to be thinking, oh, let's buy up this higher low. It gets taken out. And we come right back around to basically bring it back to where we came from. So the point of this is because of the direction is so important. For this area right here, I should have actually did it a little bit cleaner. Let's just say that this little nudge is a higher low right there. There we go. So now if we look at this, this is the higher low that people could have possibly been buying from. So their trade could have been like this. Right there. And it stops maybe above this low. And then probably going for this high. If we look, this trade took them out right here. It didn't yet hit the TP. And then we go ahead to wipe it out. So basically, to show you how it would actually look on the actual chart, this is exactly what it will look like. So you will come over here, higher low, high, higher low. And let's just say that this is Tokyo, right here. Once we're in New York, we would just be coming to take out these lows and highs. Lows and highs. And if you pay attention to it, this is all one trend. This is not a lower high. This over here would not be a lower high. Why? Because this will still be a 15-minute range. If the 15-minute range to the left was already closing above previous lows, then that means that we are not in a downtrend anymore, which I'm going to get onto in a minute right now on why I say that. So now as we're trending up and we're taking out, we have to wipe out these higher lows first. We have to wipe out all the retail buyers, all these higher lows. So now we can go ahead and enter right. And we're going to enter right at the discount of that range. We got to enter right. And then now we can go ahead and try to go ahead and take out the highs. So if we go ahead and look on the actual chart, if we see these areas, as you guys can see, this area gets taken out. And people probably think this is a higher low. So let's just draw the structure. Let's just say higher low, higher low. And then you see how this higher low, you can see how we came over here to this wick. We actually came and created a higher low at the POI. So now we go up, go up, go up, go up, go up. And then now you see once we took out Tokyo, especially on Wednesday, once we took out Tokyo, now you can kind of see how we have to go right back down to take out either the discount Tokyo or Tokyo lows. So now if we look, And also what I put on there, the hunter's candle. The hunter's candle is normally going to always happen after Tokyo. And the purpose behind that, why I say the hunter's candle, and I just didn't say okay, it's going to happen at Tokyo, is because it's kind of like white cloth. The moment you see like that last point of support or whatever, last point of supply, it's kind of like sometimes that's the only thing you see, and that you can only just trade off of that. You don't need to look at the whole schematic. If you look at this area right here, let's just say that you were trying to sell right here off of this lower high. This wick took it out. So now basically it's kind of like a stop hunt in a way, but not really. This wick, once we end up taking it out, we don't have to worry about it taking it back out again, because it already did its justice. It already went to go grab liquidity. If we look at this methane candle right here, we can clearly see that we did not trade past it. See that? That's another good indication saying that we're not going to go ahead and trade right past that range again. It wouldn't make any type of sense. If we look at this area, let me see, where is this area? I just seen it when I was going back. 1430, 1330, there we go. So let's just say that if you are entering, let's just say that you are entering at 1315 candle. This is why I say 1330. 1315 can sometimes give it, but no. Let's just say that if you're trying to enter off of this 1315 candle. So life's great. You enter off the 1315 candle. That's perfectly cool. It's perfectly cool. But if you look at this, you can see how the actual 1315 candle came right into this area. Really no point of interest type of area. If you drop down on smaller time frames, you possibly could see it. Now you kind of see how we drove right past that. That's the hunter's candle. Normally the hunter's candle will always happen. Friday, it did it to everything basically. But normally the hunter's candles will always happen in the increment of 30 minutes. So your 1330, 1430, because those are going to be your major times when the market is going to start to make the move. If we go ahead and look at this box, we already kind of like a session high. We're already trading in this area. So we have to kind of see what's in this area, because it's got to be something on a smaller time frame we can roll off of. So let's go to the 5 minute. Damn, that's cheating. So 5 minute, we clearly have a methane candle right here. But let's just say that we had one right there. How do we know to not get this one right here? Watch this. This methane candle has already been used. The only time where it can actually be valid for a double use is if we came back like later on, like next week. Like it can be used again, but this, like, this small period of time, don't ever reuse them. Only reuse them like if it's like a huge gap in the amount of time, never a small gap. So now if we go to the 1 minute, let's see how precise we can actually get it. If we go to the 1 minute, where is our methane candle? This is a good one right here, honestly. That's a really good one, but let's just stick to the basic ones, honestly. And that's why I always say, make sure you enter off of the base. Not bad. Oh, wait, nope, my bad. I take that back. Remember I said put your stop loss above where that wick ended off of that range. And you can even see after that bearish trend, after the bullish trend, you can see how we left the wick. And then once the bearish trend kicked in, you can see how that hunter candle kind of like just stopped out the ones who were trying to sell early. So like I said, you're always going to see the hunter's candle. You're always going to see the hunter's candle. This is actually the beginning of London too. Yeah, this is the beginning of London. So now I'm gonna still go ahead and keep what I want to do. If I enter at the base, if I enter at the base and I put my stop loss above there, you guys can see how it's still 10 pips. I don't preach 10 pips for a reason. I've studied this and been on the charts for long hours throughout the day to understand that 10 pips is literally equal to spread times. If you look at when Tokyo opens up and stuff like that and spreads get wider, it's it's lit like those are the best times to open up. Like I know my spreads, like they go up to like on EU, they go up to like 3 pips, like the gives wise 3 pips. But I know for me, like that's like the best time to enter, honestly, because the reason why they open the spreads is to get as much liquidity within that small amount of time. Small amount of time. Small amount of time. It's like super textbook. A lot of people don't know what's going on. They be like, wait till spreads get lowered. No, like because my broker, like I said, my spreads are always zero for XAU and Euro. It's always zero. But around when Tokyo it opens up, maybe like 3 to 5 pips, 5 pips max. So I can kind of enter off of there, low key. I'm not gonna lie, because sometimes if you look, a lot of times the pushes actually happen like right of the opening of Tokyo. If not, it'll happen 0-0. If not, it'll happen 0-4. That's just how it is. Let me see. Do you guys have any questions on this one? And to sum it all up, like I said, the Hunter's candle, like once one trend is done, when the next trend is getting ready to take over, you will always, like I said, see that Hunter's candle stop out that previous wick from that previous trend. That's all that is doing. The reason behind that is whenever you have a large amount of orders and it gets done, or actually, let me not just use that. A lot of you guys that have kids are that, are even used to do it. It's kind of like getting that last word. This candle, the Hunter's candle is literally getting the last word. So that's all it is. All it is. It's just the person getting the last word. Type 1 if you guys got that. Unmute yourself if you have any questions. I don't want you guys to feel like you can't, mute yourself and talk if you have any questions.
I had a question about properly marking the session. Does it, or I'm not the session, I'm sorry, the range. Do we do that within a session, or how do we know we marking off a range properly?
Oh, perfect. So watch this. So let me go ahead and delete the drawings and go ahead and delete the indicator. So let's just say that, let's go to the 15-minute. So 08 all the way to 1400s. So this right here is all one range. This right here is all one range from here to here. So if you look, if we take it from the high where London started and the low where London ended, this got to be 9:30. This 10:30. Fair enough. So now if you look at this, you can see how we hit that 88% perfectly. So now after we do this, we can just go ahead and go down. So now let me go ahead and delete this. Where's 1400 at? 1400s right there. After 1400s, let's go to 22. Actually, no, my bad. Let's go to 00. Because when you're marking out sessions, it's still going to be the actual like 0008 and 1400. So now let's go ahead and go this way. There we go. So now if you look at this, this is the whole entire range for New York. And we're only going to be doing this on the 15-minute. So now we're trending up. We already took out that low, which I'm going to get into in a minute. So let's see. There's 2 ways to go about this. You can either draw it downtrend or you can do it in uptrend. Reason why I'm going to do it in the downtrend is because I just want to see, because we already seen a bunch of exhaustion. Honestly, we can still trade past it, but that's the beauty of backtesting. We all going to see what's going to happen. So now we end up blowing past it now. So now if you look at this, let me take this off. Let me put channel on. So if you look at this is why I say it's a parallel channel, because you don't have to get confused with the 705 and 86. But Where I said underneath that 50% is where you can start looking for your POIs. The only POI in this area, a lot of the times when it looks like this, I know a lot will probably get confused and be like, oh, where I go? Let's look and see what happened during London. I mean, New York. So 5 minutes. Ooh, okay. We don't have no wicks right here. Let's take out that higher low. After that, we have a methane candle right here. A good solid bearish methane candle. Right there, perfectly. So now after that, decided to go up. But only because New York was trending up. Now we can kind of, expect to rally back. Like I said, the only reason why I drew it in a downtrend is because I want to see how well it's going to respect this area because we already showing major exhaustion, which, like I said, beginning of Zoom, all of this is liquidity beginning in the first place. Anyway, all liquidity. And it can't wipe out. Somebody said I have a question once you're done with this example. Go ahead, unmute yourself.
Okay, so on GJ, on this big sell-off they just had, I believe it was Thursday on the 12th, the market just like kept dropping and didn't give like a clear range to mark off. Like, what will we do in that situation?
You said Friday?
Thursday.
Oh, Thursday? Okay, let me see. So Jay's, let me see. So that dot will technically be major liquidity. The dot is either major liquidity or it's literally just wicks that need to be taken out. But anytime you see single wicks in the market like this, just single wicks, those will get taken out. Now the double, like you see, like sometimes you're having tweak the top, so like just regular generic wicks, don't pay attention to those. These are really which ones is going to be taken out, the single ones. Let me see. Okay, so you said Thursday. Let's go ahead and take it to Thursday. Thursday.
Yeah, right there. It's the 12th
Right
right,
here?
there. Yeah, you see how like it just kept dropping and then give you like a
All right, watch this. Look at this. 1400. 08. Hold on, let me bar replay this real quick before I even look at it. There we go. Oh, let's throw in the Tokyo too. Let's not forget Tokyo. All right, so let's see. Oh, was Tokyo trending from a premium? Oh, it definitely was, especially after taking this one out. So for this one right here, you see where we have this lower high right here. So basically, like when the market comes down, builds like a little bit of like a base and then comes down again. That's a lower high. Not a real one, no, but it's lower high. So let's just start right there. Let's see what the 5 minute has to offer. Oh, do we have a methane candle? It's a little too wide. A little too wide. Let's see what the 1 minute has to offer. Let's see. So what the 1 minute has to offer. So we do have liquidity above here. We have these wicks. We don't know if they're going to get taken out just yet, but let's see. So this one already spiked this methane candle. So we can actually go above here. So this is all liquidity too that you see at the base right here. Well, not the base, but like the roof, I can say. I'm gonna highlight this whole entire bearish candle, honestly. For 30 seconds. Oh, there we go. So I see a methane candle right there in the 30 seconds. Yeah.
Oh, wow.
Crazy. Okay.
Yes, I'm just showing you what it was. Me personally, if I would have got to the trades, like I said, I like to be in the trade within like 5 minutes. Honestly, my approach, if I don't see anything I'm looking for in the 5 minute and it's looking choppy, I know instantly the 1 minute is gonna look choppy. So I'll probably go to the 30-second. And that's how I'm able to find it. Just like that.
Okay, yeah, because it was just dropping and I didn't know, like, it's not
Now look
fully
at this is the beauty of it. So now you can see that this is the range of London. So now since we have that range of London, watch this. Let's go ahead and get our parallel channel. We're gonna start from the very top of it, very bottom of it. So you can see how we're not even touching the 50% for a lower high just yet. So watch this. I will be looking first buy chance I get. Where is that Tokyo? Where's that opening at? The daily open is right there. This is Thursday. That'd be kind of weird if it bought. Okay, there we go. Yeah. Okay, there we go. So once probably next week, honestly, probably next week, we will have to come and take out this whole entire range. I will be looking to buy GJF into this level right here. I will literally be curious about buying GJ into that area because if you look from this 15-minute range of New York, we never even tapped into the 50. So we for sure have to come and grab something up there. If we look right here, this is one push. So hold on, sales may not be done for GJ just yet. So if we look, this is one push technically. So let's see how it looks with this. So this is one push. This is going to be this 88.6, 705. I mean, Tuesday, I think she can start buying, honestly, because I mean, just that right there is already crazy enough. So, damn, I won't be surprised if Monday I should start buying. Honestly, I'm gonna watch EJ. I'm gonna keep this on my chart. I'm gonna watch it. I might actually try to trade it too. Honestly, let me see. When trying to zoom in on the iffy MC candle, is it okay to drop down from minute 5 to minute 3 before you want to? Okay, look at. So Carl, what you just said is actually a good question. Me personally, I don't do that because I know for a fact, like I've been looking at the chart so much. If I don't see it on the 5 minute, I'm going to see it on the 1 minute. If I don't see it on the 1 minute, I'm going to see it on the 30-second. I used to use the 3 minute, 2 minute, but yeah, it's just something that it's something I can't really explain. It's just from experience of it, but you can try to do it. Honestly, like I said, like the cleanest methane candles for your entry is going to happen on the 15-minute, 5 minute, and 1 minute. Those are my 3 favorite time frames. 30-second, like I said, I'll use 30 seconds if I gotta really dial into it. But I'm gonna be honest with you. I'm not gonna be like, oh yeah, I can. If I don't see it right then and there, I'm gonna just go to 30 seconds and I can just enter that trade and win. No, it's not as easy still yet. For me, kind of, it's like I said, I've been doing it for such a long time, but you're not gonna actually be like, okay, wait, I don't see anything right here. Let me go to the 30 seconds. Literally wait for that time. Because if you don't see it on the 15-minute or the 5 minute or even the 1 minute, instead of working harder to go to the 30 seconds, you can literally just wait for price action to build you a methane candle before the move actually happens, you know? So that's why I say looking at the time is actually really, 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 really beneficial. Would you usually trade on Monday or Tuesday or wait for, depends on the charts to move in? Honestly, that's a good question, honestly. I like to wait for Tuesdays, Wednesdays, and Thursdays, honestly. Sometimes I have caught major trades on Sundays and Mondays, but as you get better with this, you'll start to realize that okay, I don't have to trade Mondays. I'm gonna just wait for Tuesday because while everybody's getting into a trade like this on Monday and they're like, oh, I'm in 80 pips, you'll just be chilling back and you get in Tuesday and then you'll be up 80 pips, you know. So it all depends, honestly. But like I said, Tuesday's gonna always be the better move regardless anyway, like off tops. Do you guys have any questions with that? Okay, so this one is going to be my favorite that I'm going to teach you guys, and this is the true version of protected highs and protected lows. So now what this one is, this is really going to be beneficial on how to keep, someone said, can you please show examples on US 30? It doesn't matter what you're trading, bro. It could be a stock. It could be a stock. It don't matter what you trade. It's all gonna be the same. So now if you're looking at this area, let's just say that we have a downtrend. And then we have, let's say we have a lower high that goes into the premium area. Once we have a lower high that goes into the premium area, we're gonna go over here and we're gonna take out this low. And then I know LOL will go to US 30, but I'm not going to US 30. So then now after we go ahead and take out that higher low, I mean, not that higher low, the lower high. Once we get close, well, low. Once we get closure underneath this low, what's going to happen is it's going to be a reversal for us to go ahead and go down to, go up to the premium area, such as this in this area. So then once that happens, for you guys that are like, let's say that you want to save stop loss, you can always feel free to put it above this lower high right here. Because once this lower high comes out and takes out this low, guess what? This is now protected. I'm pretty sure I have this on here somewhere. Let me see, protected high right here. There we go. This is now protected. Anytime you have a lower high that takes out a low and closes underneath it, that's now protected. You can now go ahead and take out that same low, or you can take it down to the discount. But let's just say you take it down to the same low. If you take it down to the same low, what's going to happen is, let's just say that you get a failure to close. So basically what that means, it's going to leave wicks down here, but the body's going to close above it. When the body closes above it, this is now going to be a FTC, which is a failure to close. And then after you get that failure to close, that's when you know a reversal is going to happen. And then it'll completely go against you if you're in that sell still. So now, once this push takes out this high, this high, this high, whatever high, the first high, this now turns into a protected high. So you should not expect the market to come and trade right below this range now, because this higher low actually took out this high, which is now going to be protected.
Hey, question.
Oh, go ahead.
Don't you mean that's protected low?
I mean, yeah, my bad. Yes. I'm sorry if you said that. Yeah, my bad. Protected low. So then now after that, once we go ahead and this is why I'm so big on saying, you know, like if you need a question, like right then and there, because I think people like save the questions for the end. You know, like sometimes you need to say the question right now. So now if you look at this, a lot of people will be calling this a break of structure. This is not a break of structure. This is not breaking anything. We are continuing this structure. That's why sometimes you will see me have my CS on my chart. That's continuing structure. When we're continuing structure, a lot of times we can come back down, retest it, and make a lower high. and then we're still going to have to come to the discount of that range. But this is our protected low, so the market shouldn't trade past here. It can wick it to make a fair to close. It can, but most of the time it's not going to happen though. It's like really rare. And then we're going to go ahead and continue to go up just like that. So if we go ahead and go into the charts, let's go to, actually, you know what, to make it harder, let's go into 1 minute. So if we look at this area, let's see. So, I wouldn't really call that a high. Yeah, I guess we can do it here. So if you look at this right here, this is our low. And this was a perfect POI too. So let me see, where did our push start? Our push started from where our red candles is. Could you go back for an example, just for a screenshot, please? Yeah. How would you interrupt the FTC? You don't interrupt the FTCs. You could, going back into what we did on the previous Zooms, but I don't interrupt FTCs. I like to see what's going on with the FTC. So now this red candle that actually created this downtrend, this would now be our true protected high, not the bull candles. The bull candles is part of this range. I want to make sure I get the bear candles that start this range. This is now our protected high. So now if you look at this, you see the market didn't trade into it. It traded by it, but it didn't trade into it. So what happens now? Because this protected high didn't get, violated, what's going to happen now? We're going to go ahead and possibly take out another low, which is the low right here. We took it out. So if we're using this range for target, boom, boom, on a 1 minute, we're good. We hit TP. If you don't see a daily open or you want to swing or whatever, use this for your targets too. The highs and the lows. If you get lazy and don't, I mean, both ways, if you honestly feel like it, but they're both amazing ways to target. It just depends. If you don't see the daily opening being a realistic target, you can definitely target the lows of the ranges. So now watch this. You see how we have this FTC? We have a failure to close. We have 3 weeks to the downside, throwing them down, but the bodies of the candles is closing above this. Now you see how we get that reversal happening on the 1 minute. If we look at this area right here, let me go to the 4 hour. If we look at this area, let me see what area is it? So if we look, well, this is kind of cheating because it's been fucking bullish for I don't know how long. Okay, let me just go back to the 15 minute. I guess we can kind of use this one. Actually, yeah, because this is Tokyo. So yeah, we can do this one. So now if you can see this one right here, this is our actual higher low right here in this range. Why is this our higher low? If you look, this was the actual low point that actually took out this high. So if you look, like I said, we want to make sure we get the bearish candles. If we look, we have now traded past it. We broke it, whatever you want to call it. So now this is our true protected low. Boom. So now once we already have that, this is our range right here. Boom, boom. So now if we go ahead and take the fib, boom, boom, right there. If you look at this, this is also 1430. I mean, not 1430, 1400, where New York started. The true New York opening. Also, true New York opening left a methane candle too, yet again, just in the same spot. Looking over this range for the protected low. If you look, let's just say that if you were trying to enter off of this 1330 candle right here. I mean, if you want to, you can place your stop loss beneath here, just just for a safety procedure. Because I know a lot of you guys are still gonna get used to having a stop loss 10 pips are underneath. I mean, 10 pips are under. So I want to make something up, put something to accommodate you guys in the meantime, until you guys get better to achieving that stop loss. So to give you guys more confidence, this is why I'm showing you guys this way, because this is the way that will rarely knock you out the market. Honestly, it should never knock you out the market. If it knocks you out the market, just post it and let me see what you did, because yeah, it shouldn't knock you out the market at all. So if you look at this right here, we came to discount New York, super butter, super textbook, and we decided to take off. If we look right here, this is another one. This was low points that we actually took out more highs. So now after that, this can be our protected low. And then now what we're doing, we're continuing the structure. We are continuing the structure. We're not breaking anything. It's no breaking structure. We're continuing the structure. Now, if you look right here, this is another higher low that we continued up again. So now we continue structure yet again, CS. So now this right here is now our protected low. By the way, if you do this on 1 minute, you'll still have a single digit stop loss, honestly. But right here, this is a methane candle. So not only do you have a methane candle by protected low, so if you see that, now we go ahead. This was our high of the range. This is the high of the range. So now if you look, you see how we don't even come near. So when we see all of this, we can see clearly we have a bunch of selling going on. So now when that happens, we're going to go ahead and just pull this wick, because that's kind of like where the selling started at. Would you look at that? A hunter's candle came up and spiked past the wick. Reversal time. Let's see what time that actually happened. Ooh, 08:15. Ah. Oh, right here, it looks like we have a methane candle. We have a methane candle right there. Let me go ahead, bar replay this. Let's see. We have a methane candle right there. 5 minutes to make sure that it's accurate. It looks decent. Let's go to 1 minute. We go to the 1 minute. This one kind of looks like it can be a potential methane candle. So let's just see. Actually, you know what? This one does. It didn't fully get traded into. Now let's go to 30 minutes, 30 seconds, just to make sure. Yes. It looks correct. So let's just see what's gonna go on after that. Boom. So now if you look right here, this right here is all one range. Right here, all one range, where this bullish candle started right here, all the way to right here. So this is all in range. So now what you would do, you can put your fib from boom, boom. And first of all, I mean, this kind of gave it away. We already like, traded past that. So I'm just gonna keep this on here just to, so you guys can see. So we already traded past that. So now this is where our protected high is. We still have a fair to close right here too, by the way, but as of right now, this is still gonna be our protected high. Boom. Now this one right here was already protected high to begin with, because I mean, this came into our POI. So this is a lower high into our POI, honestly. So yeah. Do you guys have any questions? Ooh, hold on. Let me see what's going to do right here. Let me see what's going to do right here. Oh, let me see, what time is this? Oh, this is Tokyo, beginning of Tokyo. Yeah, I would never be taking that to begin with. All right, you guys have any questions?
Quick question.
Go ahead.
I would have a question in reference to like the POIs when you said that if it starts building volume inside of the POI, go ahead and close it out. And I was kind of having a little issues with like when to hold. Should it just wick into it, or should it be maybe like 2 candles in it and then it should just shoot out from there? You know what I mean?
Honestly, at the times that I've given you, the market should instantly move. So like if I don't get my setup at 9:30 UTC, I'm gonna wait for 11:30. If I don't get my setup at 11:30, I'm gonna wait to 3:30. I mean 13:30. If I don't get my setup at 13:30, I'm gonna wait for 14:30. Now you don't all have to do it, but I'm always up around sometimes like that. Like, you know, like my sleep schedule is so off. So I'm always up around those times to begin with. But majority of the time, like I said, you would know, because if you see a POI, let's just say that this is Monday, and then Tuesday's like right here. If you notice that you see a POI like right here, and 9:30 is like right here, wait for 11:30. Because 11:30 will probably just come out to take out these highs real quick and then drop down for 11:30. You get me?
Yeah, that makes sense.
Yeah, unless you need a wider stop loss, but yeah. You guys have any more questions?
I just had some general trading questions. Like when you're accounting for like a tight stop loss, are you accounting for like if I don't have like a tight spread broker, should I be accounting for extra pips on my spread on a consistent basis?
For sales, yeah, because the asking price is what's going to move around. So if you have your spreads where they look like this and when they look like this, I believe it's the bidding price at the bottom, but like the bidding price is not going to move. The asking price is going to constantly move like this. So for sales, yeah, that's why I like buys more, honestly, because I mean, even though my spreads, like if my spreads open up randomly, it open up like a pip, but I like buys because I don't have to deal with that, you know. So I can have like a point. I can have like last week on EU, I actually didn't post it, but I actually took a buy, and I had like a 0.3 pip of a stop loss, but it was for a buy. If I was in a sale, I'm not gonna do a 0.3 pip because it'll be kind of stupid. So I'm gonna have to do at least like a 1 pip stop loss. You get me?
Yeah, for you. I
Mhm.
mean, for me, like, do you just recommend a consistent number, like 2 pips extra all the time for sales? Or
Check and see how wide your spread, like your brokers are on the spreads, and however wide they are, like on average, just just add those on there.
okay,
So three
gotcha.
three pips is add on is good enough, honestly.
All right, gotcha.
Yeah, Deshay, I have a question.
Go ahead.
So I'm going back to that like failure to close idea. Is that similar to what you kind of went over in week 1, where you said like there'll be a session open candle, and then you'll usually get that 15-minute spike, and then if that 13:30,
Of course, yeah, that's the hunters and the failure to close.
Yeah, like if that 13:30 will closes above that session open candle, then that's a good indication.
Exactly. Like even this right here, like you see how we have the protected low when it gets swiped out, and then we also have this higher low that got swiped out now. I guarantee you that this will probably keep going down. Oh, but you see that exhaustion? When I see that exhaustion like that happening, we can possibly see a flip. So that candle right there, let's see. And then you see how we just instantly melt. Because if we're trying to enter right here, that's 04. Well, this is Tokyo anyway. I don't like to get entries in Tokyo to begin with anyway. But yeah, but because of this protected low was already violated and we already took out this higher low, yeah, the market would just, just trend down after that. Do you guys have any more questions? All right, type of 1, if you guys found use for this one, if it helps you a lot. Damn, he said 5. He said 5. Damn, he said 5. I don't know if that's on the scale. What is the cardio trend? I already went over that with the heart shape example. Which, by the way, the week 2 Zoom is already saved to my files. So this one should be up by tomorrow. I'm gonna just post them all to tomorrow. It can even be tonight, honestly. So yeah. But other than that, we have one more week to go. That's literally about it. And
I just have a general question. I'm sorry.
Oh, go ahead.
Could you just explain in general what happened during CPI Friday on Euro? Like why it wicks like that?
Yeah, so let me see. I'll go to Euro for this one. Let me close this out. Okay. So this one, let me put the Tokyo chain on. All right. So I was literally looking at this and I literally saw it fly up first and then come down. So long story short, you don't gotta look at news. The reason why I say you don't have to look at news because once that low was already set on Tuesday, it would just continue to go up, go up, go up, go up, go up, go up. Now, Thursday did the reversal. It did its job. It did its job fully. It did the reversal right into the daily openings. So if you think about it, this time was a little off because CPI, the news happens at 13:30. That's when you see the moves. If you look at this candle, hold on, let me move out the way so I can't see this. There we go. If you look at this candle, you see how it says, no, that's 13:30. If you look at, what candle is it? If you look at this candle right here, you see how it instantly made a push up before CPI? You see it?
Yeah.
So, like I said, once one area is taken out, once the top is taken out, the bottom. Once the bottom's taken out, the top. So we took out the top first. Now this right here, this was manipulation. This was manipulation to the fullest. But it wasn't really manipulation because all they did was just take out the top side of Tokyo instantly. And then they brought it back down to take out the daily high, the daily openings and tap into this daily opening. We'll take it out too. So then once we took out the lows of it, we're gonna go ahead and continue up high. Everybody, if you really pay attention to people when they say they trade news, they literally stand there in front of the chart, they watch it, they read the news, and then by the time the news is done, they hop in the market for like 30 pips. And I'm just like, if you trade the news and you say you know what the news is doing, why don't you just get into the market when the move is happening? I don't get you. Meanwhile, we're all in the trade 80 plus pips deep, so you don't need to care for the news. Now, one thing I will say is you can look on Forex Factory and just look and see, when the news will happen. So like on Friday when the news happened, actually no, Thursday when the news happened, as you guys can see, let's just say if we had a red photo right here, if we're close to taking out Tokyo's highs, I'll know exactly for sure what direction we're going to go into now, because if it's like a red photo and like a big retail news event, I want to wait and see what's going to happen. The highs were taken out first. Okay, bet. Let's go ahead and buy, because now we got to go ahead and take out the lows, which we did. Daily opening, buy.
Okay,
I was literally just waking up when I placed this buy too.
You see, I got a question.
Go ahead.
So does Tuesday, if it creates the low or the high of the week, does that kind of give away what the big news is going to do at the end of the week as well?
Yeah. If Tuesday is like in the heavy, if Tuesday is like in the heavy trend to the upside, more than likely Thursday will come make a higher low. Like this right here, this wasn't really a heavy trend. This wasn't a heavy trend at all. But this push up that happened before it kind of like gave it away, and then that's when we ended up driving it to these daily openings.
Okay.
Yeah, that was actually a good amount of push of that move. How did I get into EU sales after the buy? I don't want to go all the way back, but if you went, I had to go on TradingView for this one, but I went all the way back and it took out like a previous Tokyo session. I think it was like a daily opening on there too. So from what I saw, I ended up getting into the trade like right here and I had my stop loss like right here. Luckily, I didn't get, actually, no, my stop loss like right here. So luckily I didn't get stopped out because the market came back up here again. It came up here again. And yeah, I just decided to continue to hold. I'm still holding for the daily opening, but I still have another buy right here. The reason why I'm getting into this buy right here also is because, what time was it? This was like 1400. Yeah, 1400. I didn't catch it in time, but I was on a 1 minute for that one. So when I was on a 1 minute for that one, there we go. When I was on a 1 minute for that one, honestly, what I had saw was this, like, where was that? Let me do a bar real quick. There we go. So when I seen this happen right there, I was like, damn, I'm a little too late. I wonder if I can still hop in. Then I seen that, I was like, okay, wait. And then once I seen the candle like kind of trading up here, and it's already the 1400 candle was like already right here, I was like, damn it, okay, let me just put my buying right here, and I'm gonna put my stop loss. Like, I think I had it like underneath this wick right here, because this whole entire candle was like basically a stop hunt and the hunter's candle in the way. So then now if you look right here, I was like, okay, let me hold. Okay, let me hold. And I was like, okay, I'm just going to continue to hold. And then when I seen this, I'm like, I'm gonna still continue to hold. You know why? Because we've already started closing above lower highs, which is now we are continuing the structure. So now, let's go ahead. Boom, just like that. There's also 886 Tokyo range that sell to. You may be right about that one. I can kind of see that. Yeah. But other than that, though, I'm gonna go ahead. In the Zoom, we have one more week. This week will not only kind of like I already did the cardio trend. It was the when I did the heart shape example. It was like 15 minutes to the Zoom. Next week will be the last one. This will kind of like summarize everything all together. But not only that, I gotta teach you guys about exit points. That's gonna save your whole trading account. But appreciate you guys so much. I hope this one will really be beneficial for you guys. This is one thing that I live by every day, is making sure my structure is on point. Like I said, a lot of the times when I say F structure, if you look at this, a lot of people, and they're gonna be capping if they say they don't. Because a lot of people will be looking at this as, you know, lower highs, put your stop loss above this lower high right there. You know, let's go ahead and take our trade. Let's put a stop loss above here. And then, you know, when the market comes, they're like, whew, you know what? Let me move my stop loss back a little bit more. They're like, wait a minute, let me get another entry. Another entry and drawdown. Let me get another entry right there. Right there, right there, right there. We're gonna go ahead, lower this. Whew. They'll be like, you know what? Let me go ahead and move my stop loss back. After so many pips, I mean, you know, it's like it's pointless at that time, you know. So after all that, it's like everything would have already been wiped out. And I mean, even though this is only like 7.8 pips, you know, but they, of course, they're not gonna be doing on the 1 minute. They'll be doing like on a 15-minute stuff like that. But a lot of the times, like even right here, they'll see this higher low. Like a lot of people that go on with the regular basic structure, you can see it right now, they got wiped out. They probably thought this was a higher low, not knowing that it's a POI, minor liquidity right here, which is the daily opening, not knowing that. They got stopped out horribly. They got stopped out horribly. They got stopped out horribly. This dude was kind of sick because it was around Tokyo. But yeah, horrible. Horrible, horrible, horrible. Horrible. Sad story. But yeah, other than that, I'm gonna see you guys next week for the last one. Enjoy the rest of you guys' week. Tomorrow, you know, go ahead and kill the market.